I get the kickoff here with a little overview. This is my shotgun macro view approach to get us started for the day of all the things we're seeing in the life insurance space. Again, this will not be comprehensive of all little things, but rather pointing to a few themes as well as things I think as industry leaders you all should pay attention to see the signaling, even possibly things you need to prepare for that will take time. My slides. So what we're going to cover today, perspective. This is the truth is this is a shameless pitch of what we do at Sureify, masked under the guise of how I see the world. Industry, we're going to quickly glance over the industry the last 12 months and where I think it's going. There's some interesting things. Investments, funding IPOs, little bit of tech on embedded. There'll be some great panel on that later. The move from D2C to agents, adding value around life insurance policies, product in the emergence of potentially new products, and then where we go from here. So, shameless pitch, but it does give me a view of the industry. Sureify is a vertical platform only made for the life and annuity industry. And because of that, I get to interact with all the data players, the admin players, legacy and new, third parties that you guys are bringing to me in the industry, or third parties coming to us wanting to work with you. So I do think I have an interesting angle and get exposed to more than some, maybe most. So we have 5 main pieces of our platform that I'll highlight. Lifetime Acquire is a digital sales solution for selling direct to consumer as well as with agents. It's a need to have to be able to sell very well in both of those areas, and will continue to be. Lifetime Engage, actually we started there, noticed a big gap in the life insurance annuity space post-acquisition of a sale, and thus how do we build relationships with our customers when we're not selling and servicing them. And there's a huge gap. Our average LTV is about 8 years for a policy, and yet most people can't even name their policy provider, maybe their agent. So looking to educate, remarket, incentivize, et cetera, around typically financial, health, and much more. Lifetime Service is about stopping with all the FTEs in the call centers only, or those downloadable forms in the right corner. It says download a form, and really about fully digitalizing via web and mobile your servicing experiences. Hence, again, where we interact with a lot of your systems, and we know that pretty well, or very well at this point. But that is, no matter where I go, it's still a beneficiary change. One of the most common things, or setting up auto payments, are still gaping holes in what the consumer theme sees to be very basic. Lifetime Agents actually releasing this week at ITC, very excited about it. You heard me talk more about agent, but basically we see that insurers are going to continue to partner with both independent and captive agents. And we see that the revolution around technology has created opportunities for us to enhance our agent experiences from the monolithic systems that we provide across the board for them to log into and do their business, as well as all the other capabilities we offer on the side. So very excited about that. I'll get a little bit more into the market there. And then lastly, not going to steal any thunder from one of my good friends later, but Core Connect is our solution to bring legacy systems, to work with legacy systems and DXPs. Really, we see no matter where we go, it's in many cases your legacy system's holding back your digital transformation. And so we believe there needs to be built for purpose solutions there to enable that future. That's why I have views on the industry. That is why, and this is why I get to see a lot of things that I hope some of it will be new to you. If you're doing your job, maybe not all of it will be new to you, but if I know how to click, that that will be good for us all. Oh yeah, there's my slide of legacy systems feeding in. You can talk to us later about that. All right, so here we go. Let's jump into the industry. As you may know, 2021 was a big year for life insurers. COVID got people thinking about life and death. We had about a 40-year high on life insurance sales in 21. Prospects and clients are reporting a decent year this year. I don't think it will be as high, but I do want to note that, I asked Nick years ago, what's going to happen when we finally hit a bear market? And he said, what's interesting about life and annuities is people stop betting their whole life on the stock market and that bull that we were in, and rather look at more conservative products. So I actually think it's interesting to see. I think from my perspective, I think there's a lot of opportunities here in the future to serve, the client of tomorrow. Yes, death has been up, and both prospects and clients report. Some had calculated that well, others did not. So I've heard both. So COVID's definitely run its course. I also just heard, as many of you know, not necessarily a lot to do with life. We lost 3 years, so I was already planning to not live as long as most. And apparently, I'm down 3 more years on average. This study just came out, largely due to, there's COVID, but the opiate epidemic, suicide, et cetera. But we lost 3 years, which was a huge hit. Again, I'm no expert underwriter or actuary, but interesting data. Acquisitions by private equity continue. I have found this interesting. I've been in the space for quite some time. You're starting to see this really surge up. A lot of companies looking to offload books, old books, or books they don't like as they fix up their business. Others are being pushed outright due to the cash requirements and wanting to run different types of business. I find this interesting. To us, it's interesting because what's happening is some companies are even continuing on with their life business, but offloading. Now you have these private equity firms buying a lot of things and creating new books. For me, it's interesting to watch. I'm sure all of you are experiencing at your companies on different levels. And then AIG just took Corebridge public with the biggest IPO of the year. I think it's great. Excited for them. And I haven't seen anything like that I can remember in the last couple of years. So, interesting things taking place. The last thing I'll say as an aggregate, you look at aggregate data. It's funny, there's not as much reporting that I'd like to see on life and annuity, the nitty gritty, but there's some. But I think it's interesting to see that still right now, compared to P&C, because I will tell you, P&C is about 10, 15 years ahead of us in real transformation. They started investing a long time before. You see 100% of the life carriers are still focused on digital, or that's one of their top 3 priorities. Hey, that's good for me. It's hard for all of us to do, but interesting to see that we're really looking kind of forward and asking how to get that done. So, funding and acquisitions. Hey, we haven't seen one of these drop lately or in this last year, but it's interesting to look that we all got out of our chairs. I think I give a lot of credit to these D2C players that got everyone out of their chair, including me. The pressure was on to really digitalize, and that has started. But what's more interesting right now to all of us is I see a good shift now to the agent side of things. I don't know if you're watching this, but the D2C thing has run its course. The stock market has surely affected that. And people are a little more quiet about it right now. No one went public on those D2Cs, but others in the P&C space did. I think there's little concern there. But now everyone's looking at agents. Again, agents, both captive and independent, still do 90% of life and annuity business. And so I think everyone kind of looked back and said, we're going to get single-digit growth out of D2C for years to come, year over year. I really do believe that. It's just not, it has mins and maxes each year. But agents are still going to do it, and I think there's a lot of shift back. I mean, judging by our actions at Sureify, as well as kind of just the market data and everyone's looking back, agents are doing a great job, and I think venture capital and investors are looking to see how they can, be a part of that. And I'm sure you all are too. Acquisitions, of all the DTC plays, I think many of you thought some would get bought sooner, some will get bought, won't get bought. I thought this was something to note. Every one of the prospects I talk to in the industry, there's always those talks if you're having beers or whatever where, people think build or buy. Fabric was the first notable in the space, and there's 5 or 6 that was bought by Western and Southern. I think the other ones, who knows, but I think it's interesting to see. I think valuations helped by our friends at SoftBank hold them back from selling and many of you buying. But it was interesting to see Western and Southern go this route with Fabric. Congrats to all them. But I think we may see more of this. Although it's got, price got to be right and things got to be in the right shape. So embedded, moving to embedded, I think embedded is this topic that you may or may not hear about. I hear about it a bit. I kind of follow. It's a theme of chasing point of sale. That's really, if you're wondering what embedded really means, there's a tech side of being able to push into point of sale, but embedded everywhere across all markets is really finding where the consumer is, your buyer is, and getting them immediately upon that life event or when they need it. What's interesting about this is you see Bestow, Ethos, Ladder. I notice, and I've been noticing for years now, the insurtechs are very quick to partner and embed, usually due to their tech that they've built and their propensity to kind of know how to partner with tech companies. It just seems to be more probable. It's pretty simple, right? You go to these new markets or people that are gaining immense traction in the market. In this case, Acorns, if you haven't heard about it. It's targeting a certain population for savings and financial accounts. And they embed it here because they know a lot about that person and they can target them. And they actually give money back to them in some small amount for even buying a policy. So it's kind of interesting. Ladder has done a great job at this. They started soft with SoFi. If you were a SoFi, more an emerging bank, started with refinancing on student loans and moved, is now kind of bigger than a bread box. But it seems like they're like the choice partner there where they're embedded in their system and their sales. Again, there's a tech capability, but also a partnership ability. I don't see as much of this, again, that the big insurers doing. I know you guys are like, hey, I have TV ads and I have billboards. Well, this is, going back to this is interesting because it's a lot more based on data, target population, and then the ability to transact right through it. I don't think it's hard to imagine what 2.0 would look like. Years ago, I wrote an article called Apple Life, like how Apple could do it, but at this point, and they could, by the way, but I think like Amazon's easier to see from a, just a point of sale and like all the customers coming through and what you're buying. The only thing is I always wonder why everyone's letting the insurtechs go after it when it's very natural that your brand is more attractive, in my opinion, or known is maybe a better word, that if you have those digital capabilities, you have a major opportunity to be there. So I think it's interesting. No, none of them are doing this. I just put their logos on there. Maybe I'm going to get in trouble. But I wanted to give an example of what it could be, right? I'm looking at some people in the crowd, so it's funny. Probably will get in trouble. Literally, I saw it, and I was like, ugh. As you can imagine, like knowing life events, I created versions of this slide for the last like 5 or 6 years. I just feel like it's very natural. Like my behavior on Amazon clearly shows that I have 3 children and at all different stages. And so super interesting to imagine. And they're doing this kind of with like, I buy an air conditioner, right? I just think it's interesting to think about where it could go. Yes, maybe provocative, but it doesn't feel that far out to me personally. Who knows? I think the point here is, are you ready for embedded? The statement I'll make is that if you're not, able to sell D2C or well through agents in an accelerated way, or you're not able to push that sale somewhere else, you're definitely not ready for embedded. So it's kind of a crawl, walk, run, in my opinion, and there's more to each level. So I think being ready is my theme here. Again, a highlight from direct-to-consumer to digitally empowered agents. This is a big theme, but I wanted to show you something. For starters, direct-to-consumer is going to continue to grow. Like, if you're wondering, and we're all poo-pooing direct-to-consumer and the stock market's on direct-to-consumer stuff, that's fine. I think the tagline for all of you is don't miss the opportunity. I think as an industry, we don't have to be baby in bathwater. I remember in 2015 sitting with insurers saying channel conflict and all this. Now, that's kind of over. I think just enabling that customer to behave as they want to is the key. And I think with proper architecture and the proper sales tools, you should have the capability for both. So it isn't like a one or the other. It's like, just buy the right thing and do right. No plug for me. If you look at this, just to break it down, I made this. It's probably, someone's going to mess with my, tell me my matrix is wrong. But I thought it was an interesting way to look at it right now. You have InsurTechs, right, going direct to consumer at the top. Then you have traditional players buying or backing InsurTechs, Haven, Fabric, Vantis, right? So now you have this, they're just going at a slightly different angle. Then you have even some of those same companies, you have the traditional offering the ability to buy directly. And then you have the aggregators. And what's interesting, and you can choose to push into them. Some of these companies are doing all of them, I think. And so, I don't think it's a baby in bathwater. You don't see the consumer freaking out. I think they're just tracking them down. There's different costs. I'm not understating the costs or different things there, but just keep that in mind. I think what's also interesting now is how the D2C players are now offering agent solutions. Again, there's a pretty common theme here. Ladder for advisors, Bestow, become an affiliate, Ethos for agents, Policy Pro for brokers or agents. I think we're going to continue to see this. They're chasing more market share, and to me, it's just saying where there's more room to grow. I mean, if right now we're at 10% digital acquisition, let's say, again, there's no real formal note here, but use that and then 90%. They're just going over there and they're saying, how do I become a better option for all of these agents? So they're going after you or whatever you got. Again, I largely, I care about the insurers, and so I think it's just an opportunity. Let's not let it be. I think the main reason why this is all happening, the punchline, is actually because the end buyer likes it that way. If you look to the middle, virtual hybrid from an NPS standpoint is the #1 way. So if you look on for me, the left, right, non-virtual has a -11 net promoter score. This is a Bain study called the insurance agent shakeup or something. Then on the right side, you have virtual only, an 8. But the virtual hybrid, which is actually something I use all the time when I'm doing a little bit more sophisticated transaction of kinds, is I use the virtual hybrid. I don't know about you, but it kind of just makes sense. And are we enabling that capability is the question, because we're all using it. Moving to the rise of value-added services, I give a lot of credit to Vitality and John Hancock, Brooks, the team over there. I think they really started this idea that life insurance needs to be, we can offer more besides a death benefit in a monthly or yearly bill. And so, you don't have to like any of the things I show you, by the way. I'm just showing you. I think they really did trigger the industry here in the same way the D2C market triggered the industry. You see Haven Life recently following suit with Haven Life Plus. Both these are riders, by the way. They offer 6 value-added services about, end of document storage, beneficiary help, trust and will, creation, sleep, XYZ. I mean, there's kind of, each one of them is going after, you do see a focus around end of life. You'll see as I go through these, end of life, beneficiary, planning, trust will, you'll see common themes that you could think around what I call health, life, security, greater kind of like the word life. You want to look in that area if you're looking for value add. Ethos has followed suit with Headspace and Shred. I actually don't use any of these, but I was looking all these up to confirm I knew what I was talking about. It's just interesting to watch, everyone add these things. And then you saw Ethos acquire Tomorrow, which was a notable, or at least one I've been tracking for a long time, the legal and will, trust-based planning, similar to trust and will, I think, to add that. So really putting together these package offerings. Somewhere, I got a delay. Maybe. Empathy, New York Life partnered with Empathy to help plan or post-death working with beneficiaries. Again, this is all like pretty logical. I say, where do you start? You start with like, what are the things we touch, right? Or what we don't touch, right? What we haven't been doing but are kind of connected around life insurance. So services for the beneficiary. It's not even for the, I guess it's in the purchase, but it's for the greater, for the person that's going to receive the benefit, which I actually think around beneficiary, there's a lot of room we can do there. Nationwide recently sent me an email about, making my free will. Again, looking, I think the theme is catching on. I think it's great, by the way. I think we need to do it, and I think there's a lot of value in it. Just about done here. Again, these are emerging life products. I will start by saying I don't really feel like we've revolutionized life products yet at all. That's my broad, I've kind of been waiting. I don't know if anyone else has been holding their breath, but it takes time to do it. Even, if we look at auto insurance with telematics, right? Like how new is it or how revolutionized has it been? I think it's been a big shift. I think we've done less in life. We're still at the basics of the true life product. However, again, throwing a little bit of kudos to John Hancock. I think, they have a diabetes-focused product. Again, we can go into what's a product and not a product. I just think it's really interesting. For years, people have been asking me, are we going to move into like prevention and segmentation of who we want to go after? And that's what I see in a lot of this, to be honest with you. But what they've done is they partner with Ondu, Verily, which is a Google company. They help you kind of manage your diabetes, et cetera. And from what I've heard, if you manage diabetes well, you're good to go. If you don't, you lose your foot, right, or your life, right? So they know that, and so they want to help. They want to help people do that. I have been for years kind of engaging with companies, whether that's smoking programs, will we do things like that? There's even companies creating products for certain types of, smokers. I know you guys are like, what types of smokers? But whatever, they're happening. And really, part of it is like, it's marketing, it's product, and for me, it really comes down to data, right? So as we get closer to data and have access to more, we have new opportunities. You even have, this epigenetic life insurance. I think they went public via SPAC this week. So another kind of potential kind of new twist in this. Again, I said diabetes, epigenetics. These are kind of progressive, mixed reviews from people. But hey, I think what you see is some people are pushing it and building programs, POCs and learning, and others aren't. And I will tell you, it is hard in life insurance to move fast from what I've seen. Because tech could even be faster sometimes than actuaries and underwriters. And for some of these things that may emerge, you have to move them all. So my conclusions for today, I think the bear market brings a new day. COVID's drove sales, sadly, in many ways, but it has allowed us all to reflect upon our reality of life. I've lost 3 years, as I've said. Hopefully you're not me. But the volatile market has brought about, I think, opportunities for life and annuity providers to meet needs. Moving on, I think it is time to invest. Like, I have seen dramatic improvement over the last 5 years in the life insurance space, but I still see, you still can't change a beneficiary online. I don't know what to say, right? Like, we're still not there, and there's no one in this crowd that doesn't have, at least like 10 legacy systems holding them back. And so I think we do need to invest to then kind of find that next era. I don't think we're going to be talking about kind of these new products until we solve some of the more basic. I do think we all need to think about building for point of sale situations. You're not going to be doing embedded unless you kind of crawl, walk, run, in my opinion. So crawl or walk or whatever you need to do. I do think it's really important. You got to get there and then and maybe ask the question, what will I need to do, forget the partnership, to be able to sell at a point of sale? Pretty easy question. A technical person could break that down for you. I love the fact that to be honest with you, I kind of Trojan horsed into the space with all digital. That's what I call it. Like, no one was paying attention to digital years ago, and everyone thought it was just a hype train. But I think we have a big opportunity to use that for agents. I think that's my call sign over there. I've been at zero only for like 10 minutes. We need to increase value. I think you're going to keep seeing people bring value or increase value to those products. We can't just be, again, a sale and then a bill. Whatever you do in that form, I would say you just need to do it, because if you're just a logo, a rating, and a price right now, and people start adding services, they start to one-up you, I think, a bit. And because the consumer is the consumer, right? They choose what they want based on feeling. New products are looming, but I think they're looming, meaning they're slowly coming. Hey, we have a huge event. I thank you for coming. Let's close this gap between P and C. Let's bring it down to a couple years here versus what I think is the 10 to 15 year gap we have. Hopefully, I kicked off the time well, got your brains churning. Thank you so much.